Hello and welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called Chandelier Trend Rider. This is a trend-following, breakout-style strategy that combines three classic ideas: a Donchian channel breakout for entries, an exponential moving average acting as a trend filter, and a ratcheting ATR-based Chandelier Exit to manage the trade. By the end of this video, you'll understand exactly how it reads the market when it signals a position and how it protects and trails that position. Remember, this is educational information only, not financial advice. Let's get started. So what exactly is the Chandelier Trend Rider, and who is it built for? At its heart, this is a trend-following breakout system for MetaTrader 5. Rather than trying to predict tops and bottoms, it waits for the market to show its hand by breaking out of a recent range, and then it aims to ride that move for as long as the trend persists. Three independent ideas are layered together, and each one is designed to suppress a different type of false signal. The first layer is the entry engine, a Donchian channel breakout. When price closes beyond the highest high or the lowest low of the last 20 bars, that is, by construction, a fresh directional break of recent structure. The second layer is a trend filter, a 50-period exponential moving average. A breakout to new highs is only considered while price sits above the moving average, and a break to new lows only while price sits below it. This filter discards breakouts that fight the larger trend, which is where they most often reverse. The third layer is trade management, an ATR-based Chandelier Exit. Everything is measured in average true range and raw bar structure, so the system is point size and time frame agnostic. It can be applied to whatever symbol and time frame you choose to study, and it tends to be well suited to trending markets such as major currency pairs, gold, or an index on the 15-minute through 4-hour charts. Because of that trailing design, this approach naturally suits traders who prefer to let winners run and who are comfortable with a lower hit rate in exchange for larger trend captures. It is patient by nature. As always, this is an educational breakdown of how the code behaves, not a recommendation or a promise of any particular outcome. Trading always involves risk, and losses are a normal part of any strategy. Let's break down the mechanics step by step. The Chandelier Trend Rider works exclusively on closed bars. On every new tick it checks whether a fresh bar has completed, and it only makes a decision once per finished candle. This avoids reacting to the noise of a bar that is still forming. Before it does anything, the strategy gathers three readings from the prior bars. First, it finds the Donchian high and low, the highest high and the lowest low over the last 20 completed bars. Second, it calculates a 50-period exponential moving average to define the trend regime. Third, it measures a 14-period average true range, which represents current volatility. Now for the entry. The strategy only looks for a new position when it is flat. For a long, two conditions must both be met on the just closed bar. The close must be above the 20-bar channel high, signaling a fresh breakout to new highs, and that same close must sit above the 50-period moving average, confirming the broader trend is pointing up. For a short, the mirror applies. The close must be below the 20-bar channel low and also below the moving average. This dual requirement is the core idea. The breakout must agree with the prevailing regime, which discards many counter-trend breaks that tend to fail. Once a position opens, risk management takes over. The initial protective stop is placed 2 times the ATR away from entry, below entry for a long, above entry for a short. Because it is scaled by volatility, the stop naturally widens on active instruments and tightens on calm ones. The take profit is set as a reward multiple of that initial risk, 4-to-1 by default, and it acts only as a distant backstop. The real workhorse is the Chandelier Exit. As the trade runs, the strategy trails the stop from the running extreme. For a long, the stop sits 3 times the ATR below the highest high of the channel. For a short, 3 times the ATR above the lowest low. Crucially, this stop only ever ratchets in the direction of the trade. It tightens to lock in open profit and never loosens. That lets a genuine trend run while steadily reducing exposure. When price finally pulls back into the trailing stop, the position closes. Let's look at the actual MetaQuotes language code that runs inside the Expert Advisor. At the top, we have the input parameters. ChannelPeriod is set to 20, defining the Donchian lookback that is also reused for the trailing stop. TrendEmaPeriod is 50, the length of our regime filter. ATR period is 14, used for both the initial stop and the chandelier distance. Initial stop ATR multiple is 2, chandelier ATR multiple is 3, and take profit reward multiple is 4, expressing the backstop target as a multiple of risk. Lots sets the fixed volume. Now the long block. The condition reads, if close 1 is greater than channel high, and close 1 is greater than the EMA. In plain English, the just closed bar must break above the prior channel high and also sit above the moving average. When both are true, the entry price is the ask, the stop is placed initial stop multiple times ATR below entry, and provided that risk is positive, the take profit is set at reward multiple times that risk above entry. The code then calls trade.buy with the volume, stop, and target. The short block is the exact mirror in the else if close 1 is below the channel low and below the EMA, the entry is the bid, the stop is placed ATR multiple above entry, and the take profit is placed reward multiple times the risk below entry. It then calls trade.sell. Notice both sides share the same volatility scaled stop and the same reward logic. Only the direction flips. Let's bring the whole strategy to life on a chart, walking through a long trade and then a short trade, one candle at a time. On screen, you can see our price candles, with two blue lines marking the Donchian channel, the upper band tracking the highest high, and the lower band tracking the lowest low of the recent bars, and a gold line for the 50-period moving average that defines the trend. Look at the first several candles. Price is drifting sideways in a tight range, and the candles stay neatly inside the Donchian channel. Neither band is being challenged, so the strategy simply waits. There is no breakout, and therefore no reason to act. Patience is built into the design, because most range-bound bars offer no genuine directional edge. Then watch the breakout candle. Price pushes up strongly and closes decisively above the upper Donchian band, clearing the recent range. At the very same moment, that close is sitting above the gold moving average line, so the trend filter agrees. Both conditions are satisfied together, and the buy entry marker appears. This is exactly the setup the code looks for, a fresh break to new highs that agrees with the prevailing uptrend. As soon as the long opens, the initial protective stop is placed 2 times the ATR below the entry, down near the base of the breakout. From here, the chandelier exit takes charge. On each new bar, the trailing stop is calculated 3 times the ATR below the running high of the channel, and it only ratchets upward. Follow the next candles. Price extends higher, printing fresh highs, and with every step the trailing stop climbs up behind it, quietly locking in open profit and never loosening. The move continues to build, and price reaches the take profit target, the backstop level set at 4 times the initial risk. The long trade is complete, having ridden the trend from the breakout all the way up. Notice how the whole sequence was about following the move, not predicting it. Now the market rolls over. After the peak, momentum fades and price begins to slip back. Watch the gold moving average line. Price crosses below it, and the trend regime flips from up to down. The candles start pressing on the lower Donchian band instead of the upper one. Then comes the mirror image setup. A candle closes decisively below the lower Donchian band, breaking to a fresh low, and that same close is now below the moving average. Once again, both conditions line up together, and the sell entry marker appears. The logic is identical to the long, simply flipped, a fresh downside break that agrees with a downtrend. With the short open, the initial stop is placed 2 times the ATR above entry, and the chandelier exit now trails downward, sitting 3 times the ATR above the running low and ratcheting lower as price falls. Follow the final candles. Price works its way down, each new low dragging the trailing stop down behind it, protecting the open position all the way. Finally, price reaches the short take profit target, again a backstop set at 4 times the initial risk, and the trade closes. There you have both directions of the Chandelier Trend Rider in action. In each case, the entry waited for a genuine breakout that agreed with the moving average trend, the volatility-based stop defined the risk up front, and the chandelier exit trailed behind the move to manage it. Same rules, mirrored for longs and shorts. That is the entire philosophy of this strategy. Enter with the trend on a breakout, then let a disciplined, one-directional trailing stop do the heavy lifting while the move lasts. That brings us to the end of our educational breakdown of the Chandelier Trend Rider Expert Advisor. Today we covered what the strategy is, how it combines a Donchian breakout entry with a 50-period moving average trend filter, and how the ratcheting ATR Chandelier Exit manages every trade from entry to close. We walked through the actual MetaQuotes code for both the long and short signals, and we illustrated a full trade in each direction on the chart. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.